we caught up with the Secretary of Energy, and I began by asking them about some of their big plans. Heady goals, $750 billion in energy. You guys want to sell it. You want to triple energy sales to Europe in the next 3 years. We talked a little bit with your colleague and friend, Secretary Burgum, about it yesterday. But realistically, how do we do that in the United States? How do the Cheniers, the Venture Globals, the Exxons, the Shells, the Sempras, how do they accomplish those goals?
So, number one, there's still a lot of gas from Russia going into Europe. 15% of Europe's gas supply still comes from Russia.
About $8 billion a year, I think, is the number, I think.
Yeah, and they've set a date to end that in the next 18 months. So there's a big increased demand right there just for the United States to finish displacing the Russian gas. I also think you're going to see demand for AI and increased demand for electricity in Europe. Europe has not been a growth market for energy the last 20 years, but their projections are to be a growth market going forward. So we're going to grow our LNG exports here. We're going to grow our oil and refined oil products exports to Europe as well. And ultimately, we're going to bring nuclear technology and new reactors to Europe.
I'm going to get to nuclear in just a second. Do you believe, and I think you're heading to Brussels tonight or tomorrow morning. You've got a pan-European trip coming as well. Do you believe that Europe will agree to either slow or stop, hopefully stop, all purchases of Russian liquefied natural gas?
They've absolutely insisted they will, that they will, after the end, by the end of next year, 2026, no more imports of Russian gas of any kind. You can still buy Russian spot cargoes till the end of this year. You can buy contracted gas in 26 from Russia. But once January 1, 2027 comes, no more Russian gas.
What is that going to mean for prices? Have you talked to the industry? What are they going to say about it?
Well, the reason they have a timed phase out is so that U.S. exports can ramp up to fill that hole. There's a lot of new supply coming on for LNG that I think will hopefully keep prices in check.
Okay. Oil. Natural byproduct, gasoline or natural gas, about a third of the byproduct of oil drilling. The price of oil continues to go down. There's a lot of concern in the United States that U.S. production is going to fall because prices are falling. In your previous life, you ran Liberty Energy, right?
Yes.
You helped drill for oil. Where is drilling going? Where are oil prices going?
Continued evolution of efficiency. American producers are so innovative, and with relief from the Trump administration on burdensome regulatory regimes, we're doing everything we can to lower their break-even costs so that they can become profitable at ever lower oil prices. But are oil prices on the low end of a band right now? They probably are. They probably are. We've seen a lot of that spare OPEC capacity come back into the market. Yeah. That's been a little bit of a downward pressure on oil markets. But I think in the next few years, you're going to see strong global economic growth, strong increase in demand for oil. Yeah, you'll probably see a little firming in oil prices.
OPEC just raised output, though, again, very small margin. That's on the quota side, but they just raised it on Sunday. Do you worry that a price war could spark?
I don't think so. The demand for oil is growing at over 1 million barrels a day of incremental demand every year. I worry more in the next 5 or 10 years. Where's that oil going to come from? I'm happy to see that supply come on market. And when there's a lot of spare capacity sitting on the sidelines, that's overhead for oil markets. So think of it right now as we're shrinking the spare capacity that's on the sidelines.
Yeah, we got Chevron over here, Exxon's over there, Shell's over here. What are they saying to you about their concerns for oil and gas right now?
Yeah, look, oil prices are on the lower end. So, are they going to add a whole bunch of rigs? No, not in today's environment.
Rig counts have been going down. Baker Hughes is right there.
Rig count's been going down, but American production hasn't gone down. The rate of growth has slowed. We may see a plateau in U.S. oil production for a little while, but I am very bullish on the future of U.S. oil production. And, of course, U.S. natural gas production is growing at a good clip now, and it'll grow at a good clip for as far as the eye can see.
Okay. You're probably going to dodge the heck out of this question, but I'm going to ask you. You used to be on the board of Oklo. Stock's up 1,000% in a year. Nuclear startup, new scale. You're now the Secretary of Energy. You've had to resign that position. Huge bullishness around nuclear in the United States. Is it overdone in any way?
No. I mean, nuclear was 6% of global energy in the year 2000. Today, it's 4%. This is a technology, nuclear. If you look out 500 years from now, nuclear is going to be huge. In fact, we're going to use nuclear power to create hydrocarbons. Can't have a modern world without hydrocarbon molecules. We just might get some of them in a different fashion down the road. But no, and this administration is doing everything possible through 4 executive actions, reform of the NRC, reform of permitting across the board. I truly believe we're on the edge of a large nuclear renaissance.
So you think maybe it sounds like you're kind of saying maybe traders have not gotten ahead of themselves. I know you can't comment on.
I'm not going to comment on stock prices.
I know, but I bet there's only a couple nuclear stocks that are out there, and then like this.
Are we at the start of a new nuclear golden age? I strongly believe we are.
Okay, Oracle again, another single stock reference you can avoid. But Oracle soaring today, huge cloud infrastructure dreams. AI is running the stock market, Mr. Secretary. You know that. Is there any part of you that thinks that America's AI dreams, $500 billion in capital spending, is overdone?
I don't believe it is, because I'm a firm believer that AI is transformative even beyond what people think. Not just for business productivity and humans, for AI for science is going to be transformative. AI for national defense is going to be transformative. And it's critical that the United States stay in the lead in AI. So in Department of Energy and across the Trump administration, we're doing everything we can to enable rapid data center build-out. And I think the returns on that are going to be exciting.
Okay, wrap it up quickly with this. You've got pan-European European meetings tomorrow. Just combine the words Europe and meetings into one word. You're welcome. Some nuclear conversations. Anything you'd like to share with the CNBC global audience right now about the next few days? What's going to happen? What's the news going to be?
We're going to go to Brussels for some very serious dialogues about energy. In that trade deal we did with the European Union, as you mentioned, they've committed to buy a lot more American energy. They have a lot of regulations, methane rules, CSDDD, that's sort of an ESG regulation that stands in the way of bringing energy in. We need to reform that. And so we're working with the European Commission to get regulations more sensible so it won't impede the flow of energy into Europe. That's not just good for American exporters, it's good for Europe and European people. I'm hoping we see a real energy pivot in Europe so that it starts becoming a growing continent again. Okay. Europe's energy production has declined. Consumption has been on decline for 15 years. We want to see it growing again.